All right, we are officially open for trade. Allies celebrating the opening bell. They're, of course, a publicly traded company listed here at the stock exchange, a digital bank. And joining me now to talk more about the markets is Jason Rotman. He's a financial advisor at Elevate Financial Partners. Jason, great to see you this morning. Thanks for joining. And stocks opening with gains. What's your take on the state of the market?
Well, right now, the world loves to invest in the United States of America. I mean, there's so many things going on right now, whether it's France, whether it's South Korea, whether it's Europe, needing to cut rates to stimulate the economy. The place to be remains the United States, obviously, with Trump being elected. Wall Street likes Donald Trump's policies. They like Besant. All good things right now. So that's why we're seeing the S&P is above 6,000, not stopping. There's really no major imminent reason to pull back from this market right now.
Interesting, Jason. So let's talk about some of the things that you like. Obviously, you're noting here that investors do see the U.S. as a strong house when you look at the global picture, even though we know many market watchers have said for years that international stocks have been undervalued. Is it GDP? Is it earnings? What exactly do you like under the hood?
Great question. I mean, listen, the Trump aside, even, I mean, what the U.S. is producing is extremely unique. I mean, we have NVIDIA, we have the mecca of AI as a United States company. So when we look at what the world is desiring right now from a nuts and bolts element of the economy, it's actually coming from the United States. So politics aside, even, I think that is a huge driving force of the draw of the U.S. stock market. It just goes back to why the U.S. is so amazing in general. We are the hub of innovation of the world.
So, Jason, I do want to talk more about that because we know that as the U.S. stock market sits at or very near record highs for all of the major indexes, we did see political chaos unfold yesterday in South Korea. And of course, South Korea has been historically for decades a major ally of the United States. Explain what's happening there from a market perspective.
Well, listen, it's unfortunate, with the boots on the ground, so to speak, and the distress that's being put on the people there with the political uncertainty. But from a market standpoint, we are seeing a very muted response. The Kospi dropped a couple percent, it came back. The currency dropped a couple percent, it came back. We are not seeing any major market responses. Why? Because even the last time there was an impeachment 7 years ago, there was no major market turmoil, which is pretty interesting. I mean, the other reason is that we're not seeing a major market response in South Korea is that, for example, if you look at the iShares South Korea ETF, it's already down 14% this year. The Kospi already down 7%. South Korea has already been struggling with the potential recession and interest rate cuts. So it's kind of been already priced in, Kristen.
Okay, so the question I think for U.S. investors, Jason, and our viewers would be, is there any potential knock-on impact here to the U.S. economy and thus the U.S. stock market?
From South Korea, no, because again, to my prior point, South Korea, I mean, listen, obviously it's not a rinky-dink economy, right? It's like the 7th largest economy in the world, 4th largest economy in Asia. But the reality is what's happening in the U.S. right now is very special. It's very unique relative to the global stage. We are producing what we need. So, look at Samsung. I mean, Samsung is negative this year. So from a U.S. investor standpoint, the safety remains in the U.S.
Interesting. I do want to talk about some of the stocks, Jason, on your radar. I know that you had mentioned Chevron as a stock that you're watching as the oil market is very much in focus. What are your thoughts on Chevron?
We got to take a look at Chevron, Kristen, okay? Chevron, I have many things to say about Chevron. First of all, you're getting paid to wait, okay? So every night you go to bed, you're still waking up richer, okay? You're getting paid 4% dividend every year just to wait. Number one. Number two, Chevron, as huge and profitable as a company it is, it's been doing nothing for 2 years. It's been flat for 2 years. We're in a holding pattern of all major energy stocks. Again, as this new political administration takes hold, as we get potential inflationary pressures from Trump, as we have Berkshire Hathaway owning 25% of Occidental, right? They see value in the energy market during this holding pattern. Chevron has raised the dividend 36 years in a row. I think if you're a long-term investor, I think Chevron presents incredible value right now.
Jason Rotman, financial advisor at Elevate Financial Partners. Jason, thanks so much for checking in with us early this morning.
My pleasure. Take care.